September 17th, 2024. I think today is one of those days where if we get a bear bar closing near its low right here, it's a credible swing. And I would say there's a 30% chance it's the high of the day. The reasoning for that is we're gapping up into resistance this high and around the open of the month. We're a little bit above the open of the month right now. So it's a small bull doji bar right now. We might have to get above the prior month's high. I don't think. Yeah, so 5729.25 is the prior month's high. So we're probably 29.25 is right here. Probably going here. Usually, when you trigger a monthly signal or a monthly signal bar, the market pulls back after you do it. So I wouldn't be surprised if we pulled back after we got to it. But I think bar one, gap up always in long, yes, and you have to keep in mind breakout of this entire trading range that we've had over the past few days. So maybe a measure move up here somewhere. To argue it's this. Either way, we're going to get in that area. And I think the open of the month is what's really important here. So I'll be interested to see if this is a good looking bull bar closing on its high. I don't think it's going that much higher. I think mostly this is just a vacuum test of the high. What would I need to see to buy? Well, a couple of good bull bars, probably something along those lines. I'm not really interested in buying bar one if it's a bull close. Even if this is a strong bear bar closing near its low, we might have to go above bar one. So some traders who are selling might prefer to use a wide stop, but that's only if this bar closes on its low. Yesterday was one of those days where it's a little bit more difficult, and I think it just makes sense to, be very patient on the day following. Whenever I have a bad day, I try to, just mentally reset and go back to basics on the following day. So this closes on its low. I really don't usually trade the first bar of the day, but I might. We are in a resistance area. But it needs to be a basically perfect close. If it is, though, it's going to be a credible swing short. But, 80% of days have a minor reversal on the open, so. Yeah, I mean, you can definitely take it. I think the context is really good here. Tried to enter, but it rejected my order, which is fine. It just means I hit it as the market went down. So I sold, but I sold a half size position because I'm not sure we're going to go straight down. When you do this kind of thing, you don't normally go straight down. So I am going to be willing to sell more. I have to be willing to sell more above the bar, I think, if I'm going to take this trade. But one is a credible swing and a possible high of the day. My stop is a measured move up of bar one, and I should probably be willing to scale in above one. I'll probably sell a little bit more above one if we get there. Reason being, there's more sellers than there are buyers above one. What are the odds that one is a bull trap or a bear trap, and then we get a strong bull trend day out of this? Probably not all that great. Might have to test up to the open of the month, but if we do, we'll probably pull back. This is kind of the problem with these trades is usually they're not going to go your direction very fast. we just collapse down, I'll probably hold for a big swing or try to hold for a big swing if we start to go down pretty quickly here. But I think most of the time you're going to get a trading range open here. So you have to be aware of that. And yesterday is one of those days where you could just think a lot about scalping and, you know, not being greedy. And if you just took your trades, took reasonable trades and accepted that it was a trading range day, took your 10 points when you got it, maybe even 5 points sometimes, you probably would have done, or you'd probably do pretty well. I didn't do very great yesterday. So not much to do for me, even if it's a bull close. I'm not really willing to buy above the bull bar up here. I think it would be better to wait to get to the moving average. The bulls want either a bull trend from the open. So if two closes on a tie, it's probably in theory a reasonable swing buy for a possible low of the day. So let's say it stays this size and it closes on a tie. You could risk 5 points just taking a chance that we get to maybe like the all-time high or something. So risk 5 points trying to make 60, something along those lines. You could do that. To be a perfect close. If this is a perfect bull close, I'll actually probably just exit. My risk is very small right now. But it's only if it's a perfect bull close. If it's anything other than that, it's probably not all that great. So had this closed on its high, I'll say had it, just let me bar finish closing. But had it closed on its high, it would have been a credible buy, taking a chance that we keep the gaps open with yesterday's high. You know that yesterday was a trading range, and this whole thing's been a trading range. So the bears are essentially taking a chance. If you're selling, you're taking a chance that this is a failed breakout above the trading range. And a lot of times when you get a failed breakout above the trading range, you try to get a breakout below the trading range. So you might be trying to get somewhere down here and make 40 or 50 points. See in the Globex session, what was this close? 56.72. So you can see in the Globex session, we did not get back to this area. So pretty unusual to get 3 bars that strong and not test it. If we can get another bear bar, so if 3 is a bear bar closing near its low, then I think I can put my stop above 1. You can see some bears who sold the close of 1, disappointed in 2, exiting, and that's part of what's causing 3. So what's the pattern, right? So the bears, they see a bull trap on the open, the gap as a bull trap. In theory, if you think about the gap as a big bull bar, then you could argue bull trap, and then 2 rallied up to around the open of the day, which is where the big bull bar would have closed and the bull sold. So that, you could theoretically argue that pattern. I don't have a problem with that. And the bulls are hoping that we've seen the high, or sorry, the bulls are hoping that basically if we get either 2 legs down to the moving average or a wedge to the moving average, or we start to get bull bars closing near their highs and get a bull trend from the open, they think that there'll be buyers here if we get to this area. What do the bears want? Well, like I said, the bears want bull trap on the open and a swing down to either this high. This is the obvious magnet, right? Is around here. The less obvious magnet is, or the more difficult magnet to reach, is the other side of the trading range. But sometimes when you fail to break out above one side of the trading range, you try to break out at the other side. Text. Is it all that bearish on the hourly? Not really. It's possible that we get, you know, this becomes, or this is disappointing and becomes trading range. We try to close the gap around 5,700. This is, again, the area that I was mentioning that we were talking about. So, this is kind of the thing with if you're selling, a lot of times the bears, they want to see if they're going to sell below bar one, they want to see really good follow through on bar two. And some of them, if they don't get it, they'll exit. And that's part of what's causing, like I mentioned earlier, bar three. If this is anything other than a bull trend day, the gap should theoretically close. A lot of times on a trading range day, we'll get back to the prior day's high. So we get back to Monday's high, which is the bar 78 high. So what do I need to see here? Well, I mean, in theory, a bear bar closing near its low would be nice. If it's a bull bar closing on its high, it's a possible high of the day, but I don't, you don't really want to buy above three in this context. You'd probably rather wait and see if four is a good looking follow through bar. So it's not good for the bears that the other bears. So the bears who sold the close of one, a lot of them exited on three, and that's not good for a lot of bears. Do I think this is going to be a bull trend day? I'd still say probably not. Weak signal bar on bar two. So when you get a weak signal bar like bar two, it's probably a minor reversal. Usually, if you're going to get like a big trend, you have a better signal bar than something like bar two. So just ask yourself from the perspective of a bull who buys above bar two. If you buy above bar two with a stop below bar two, how confident are you that you're going to make any sort of, reasonable profit? Probably not very. Currently, bar one is still the high of the day. You can see we moved pretty quickly up on the open there. It's possible a lot of bears were exiting, or a lot of bears were exiting, and that's what's causing the initial drawdown or rally here. Sorry. Some bears, they just exit on the close of three. So the bulls, they're hoping that the gap up is the spike, and then one is a pullback, and then it's a bull channel, 2, 3. It's not very likely that we're going, that one is going to be the high of the day, and that we're going to get a swing down. Like I said, even in the best context, it's only a 30% trade, so it's really not a very high probability trade. But when you're right, you'll be right pretty big. Or two is a possible low of the day, but I don't really want to buy above that kind of bull bar. Mostly trading range price action so far. So it's possible that the remainder of bears just give up. Bears at this point are trying to exit without a loss, I think. A lot of bears are. So unless four is a surprise bear bar, it's probably just a trading range open. But you don't really want to buy above three. Think about how far above the moving average we are. 15, 20 points. Well, not quite 20, but over 15 points. So it's really hard to want to buy above three. So what if four is a bear bar closing near its low? Well, that would be a double top, 1, 4, and neckline would be the 2 low. bears would be hoping to get a swing down, maybe to here, which is around, this area. If we get to here, we're getting to here. So it would be really, really unusual for us to reverse at the measured move without getting it down here. If we did, let's say in theory, we got down here and then we got a good looking reversal up and we kept this gap open, that could lead to a pretty large bull trend. Because it's pretty unlikely that that's going to happen. So a lot of bears were more interested in selling a pullback rather than selling the low. Whoops. A little bit above 50% pullback, much well above 50% pullback, but a lot of bears more interested in stepping in, selling on limit orders like above bar 3 rather than selling below bar 1, which tells you that this is probably a trading range open. So the bears, it's good for the bears that this went above or went below, so that bar 4 went below bar 1, because if bar 4 closed a bear bar, but it was closing around the close of bar 3, and that was the low of the bar. Let's say, forget the tail, let's say it closed here. It's offering you a better entry price than one offered you, and that's usually, a sign that it's a little bit of a sketchy area to be trading. So not really that great. Are we always in long? Yeah, we're probably still always in long, but it's not really that good. If 4 closes on its low, that's a big problem for the bulls. Okay, so 4 got pretty big. Bulls are not going to like that. They don't want 5 to trade below. So in theory, for the bulls, so gap up is bull trend. High 1 on bar 2. High 2, they're hoping on bar 5. If bar 5 is a high 2, it's a credible buy for a possible low of the day. However, I don't think most traders want to take that. I'm going to pull my stop to above bar 1, because if we were going to, hold on a second. I just added a little bit more to my position because my position was really, really small. So the reason why I added a little bit, because the management is now very simple. Because stop goes above 1 now, it's totally fine to do that, because when you're using a wide stop, kind of the idea I think behind using a wide stop a lot of times in a lot of situations is to allow for one reversal against you. So if you're selling below 1, 80% chance of a minor reversal, it's probably not going to go straight down. So you're trying to allow for the market to go against you a little bit without shaking you out. So you're trying to allow that even if 3 went above 1 and you felt your premise was valid, that you can stay in the market, because a lot of times the market will do that and it'll shake you out if you let it. So it's really better to just so that's why sometimes it's better to use the wide stop, so that you can let the market go against you once, and then if it goes against you twice, then okay, then you can get out. But usually you don't want to get out, or I say usually, it's a dangerous thing to say, because a lot of times you do want to get out when there's a first reversal against you, but it's later in swing trades when you want to get out if there's a first reversal against you. So like if you're early in a swing trade and there's a reversal against you, the market a lot of times is just trying to shake you out of the market. So it's better to sit as long as you feel your premise is valid. But if there's a couple of reversals against you, then you can exit. So bears, they want bar 5 to be a bear bar closing near its low, and the bulls want a high 2 buy. It's not going to be a great high 2 regardless. But if it closes around 57.20 or something, that would be probably the most reasonable high two that they could, the Bulls could draw up here. It's probably going to be a minor reversal up either way. Maybe we've seen the high of the day. We're still reasonable. It's still reasonable to think we're always in long. So, you know, it's okay probably to buy above if you get a bull bar closing your high here, but it's pretty sketchy. Sometimes you have to consider if you're expecting a big swing. That's kind of actually the biggest thing to be honest with yourself about. That's really difficult to be honest with yourself about is, are you expecting a big swing? And, you know, or is a big swing a reasonable possibility here? If you're selling below, 67 yesterday, is a big swing like a big real possibility there? Not really. I mean, it's probably not going to happen. It's a minor reversal. This, you think about the fact that we have the big gap up. The minimum target for the Bears is here, and it's possible we get all the way down here. What are the chances we get all the way down here? Maybe 30% or something. So am I going to scalp out here? That is a good question. I kind of have two responses to that. There's, the one side of me that thinks we can go a lot further, and there's the other side of me that knows if we do go a lot further, it's going to be in a really difficult fashion. So it probably makes sense for me to just get out if we get there. Also, look at the price action we're getting. This is a really important thing to just think about. Like, look at this price action. Bar one, yep, good bar. Okay, pull back 2, 3, 4 tails. 5, it looks like it's going to have a tail. So, am I getting 2 to 1 of my true risk? That's a better question. Is it reasonable to scalp out? And if you look, my true risk from the one low. Oopsie. So true risk is the concept of how much you actually had to risk. It's called actual risk or true risk, whichever one. I've heard Al say both. But your actual risk was to this high. Nobody knows until the market's gone a little bit of a ways, but it ends up being around that 78 high, and it's not a surprise. So I'm going to pull my stop above 4. Do I get out if 6 is a bull bar closing on its high? Probably not. I think it's tough. What's the argument? The argument for the bulls is that we have a gap up, a high 1 here, and this would be the high 2 and a possible low of the day. And that's all true. But I think that this is probably not a bull trend day. So I moved my profit taking order, my limit order to the Monday high, a few ticks above actually. So a lot of times the market will get within a point of a magnet. I think Monday's high is a pretty important magnet. So if we do get close to it, I think we're probably going to hit it. But my big problem with exiting Above six would be, am I ever buying six and expecting anything remotely good to happen? No. So it's probably reasonable to just keep my stop above four. Yes, it's a high two, but four or five is strong enough for a second leg down. Maybe only 30% of the time should we get above the prior legs high before we go back down. So obviously, I don't want to see this close this way, but if it does, I probably am not going to exit. This is not what I want to see, though. This is more signs that we're getting a trading range, but do you ever want to buy this high two, this far above the moving average? Not really. If you're buying this high two, you're probably gonna lose. So what's the problem with being short? Well, first leg bar one, pull back two, three, second leg four, five, pull back six. So the next leg down should be your third leg down, possible wedge. Maybe at the moving average. I would just be surprised if we got a wedge at the moving average without touching Monday's high. So it's an inside bar, so it's a low one short for the Bears, but bull bar, so probably buyers not too far below. But I think we're always in short, four or five, always in short, expecting a second leg down. Bar seven, so a lot of times you get something a little funky on bar seven. If you've been, we might get something weird here. If you've been trading long enough, you'll start to notice that, the way, if you guys use an active trader ladder or a matrix, whatever you want to call it, you'll start to notice the way it moves. You'll be able to tell if you're going to get something odd. If this becomes a giant bull bar and stops me out, then fine. Not really that worried about it. So again, the big problem here is even if we get huge bear bar closing near its low here, it's a third leg down. I'm personally right now, I do better watching the bull side than the bear side, which is not a good thing. It's a bad habit. And it's a terrible one. But sometimes when I'm managing my trades, I'll put on the inverted ES and I can just see it from the bull side because I noticed I was missing a lot of bear trades and I realized I was missing them because I was just too focused on bullish setups and that was not a good thing. So sometimes I'll just throw on the inverted ES and watch that and just, you could, if you're trying to trade a bullish setup, you could just watch the inverted ES during, sorry, if you're trying to trade a bull setup, um, if you're trying to trade a bear setup during a bear trend day, but you're bad at getting in on bear trend days, but you think you have bull trend days figured out, you can just watch the inverted one and you'll probably be fine. I don't know if I don't think it's offered on most platforms because, Al's talked about making inverted slides before and his process, he is like all sort, like he'll buy it, he'll change the color. or the bar colors and then take a picture and then flip the picture over. And that's a lot to do. I just put a little minus right before the ticker name. So the way you get it, if you're on Thinkorswim, is you just put, you can see I have ESZ24. You just do minus ESZ24. You can do it for anything. So what am I doing with 7? Well, 7's not what I want to see, obviously. It's a high 2, 6. If, it's a bull bar closing near its high, probably okay to just get out. I probably will. And it's a possible high of the day or low of the day. The way that the market is moving right now, there's an old saying that Al says where he talks about if it's really easy to get out, then you probably shouldn't be getting out. But if the market is making it difficult to, make a scalp, then scalping is probably the correct decision. So if it's a bull bar closing near its high, I think I probably have to exit. You could just sit and let your stop get run. I don't think that's wrong to do, to rely on your stop here, because really reasonably tight bear channel. Okay, yeah. Well, it was a reasonably tight bear channel. So bull surprise on bar 7. Trading range there. At this point, I'll just let it get run. Do you buy above bar 7, possible low of the day? You definitely can. Tail on the bar 7 high, so that's not great. But I'm definitely getting stopped out at this point. It'd be very unusual for me not to. Second, pause the video. I have to write some stuff. Okay, so I just got out, and now we have a possible bull trend day. Bar 7, big enough surprise for a second leg up, and it's a possible low of the day. This gap is important. Looking at the risk. So if we didn't go down, we might go up. So we sold off at the new high initially. It's possible we just go up to the all-time high today. I don't know exactly how far above that is. So we're trying to break out above this high, which is, important resistance. I think we actually just broke above it. That would be why we pulled back. So 85 is the all-time high. So we have one credible open gap so far today. think the bulls are trying to create a second open gap with our one high. Even if there is a little bit of overlap, it'd be okay. Be long. It's okay to be long right now, obviously. Stop below 5, or even stop below 7 is fine. You just consider the fact that 7 traded below 6. So probably buyers down here, but okay to put your stop down here. Really right on the, you know, right on the resistance area. It's 29.530 is the resistance area. So 8 is kind of an important bar. We have consecutive full bar 7, 8, possible bull trend day. We'll see if we overlap with the one high. That'll be important. If it's small overlap, it's probably still fine. Buy the market, buy the close, buy for any reason. I'm really tempted to just buy. I can always buy higher. I think the open gap with yesterday's high is really good for the bulls. Still keeping the gap open with the one high so far. Obviously, the 6 high and the 8 low is an open gap. Multiple open gaps so far for the bulls. The one high and the 9 low is an open gap. Stays open, but what if 9 is a bear bar closing on its low? I mean, it's a possible high of the day, but I think we're always in long. I think we're going higher. It's possible that we get, say, the gap up was leg 1, leg 2, maybe something like that, but no sign of slowing down yet. Nine is a bear bar closing near its low. You bulls exit. I don't think you have to. Well, maybe. If it's like this, 7 is a possible low of the day. See, we just overlap this gap. And then this is going to be a possible high of the day. Let's say it closes like this, right? And then when next is a bull bar closing near its high. That would be a credible buy, taking a chance you have a spike, pullback, and then a bull channel. But 6 being the bad signal bar is important. So this would be a low 2 on the open, you could argue. So the bulls, they bought as we tested back to the bar 7 high. You can see they were more interested in buying. So possible bull trend from the open, high 2 on the open, bar 2, bar 6. So possible high 2 and bull trend, but 6 is your high 2, so it's not all that great. 7 trap traders, and they're still trapped. So you're more what you're wondering right now. What are we going to get? So this to me is possibly a pullback in the bull trend. So 6, 7, 8 bull trend, pullback 9, spike in the bull trend, I should say 6, 7, 8 pullback 9, and then 10 could be the start of a bull channel. So if 10 closes on its high, you can buy the close and put a stop below 9. What if 10 closes on its low? I don't know if I would sell it. I'd probably just wait, but still a possible low of the day. So if 10 is a bear bar closing near its low, do you exit? I think so. It depends how it looks a little bit, but in general, you probably don't want that. If you're a bear and you sold the close of 8, taking a chance it was a bull trap, and 10 is a bull bar closing near its high, do you exit? Probably. Can you buy the market right now? Yeah, probably. Just put a stop. Probably all the way below 7. But if I had bought above 7, I'd still be long. However, if I had bought above 7 and 10 closes on its low, I would be getting out for sure. What are the odds you've seen the low of the day? Well, close of bar 6, you have a 50-50 chance of having seen the low or the high of the day. So maybe probably like 50-50, relatively, I would say. So we need to go 2 ticks above bar 9 in order for bulls who bought above 7 to make 10 points. Which I think is pretty possible. Should be buyers below 10 if we go below it. Some bulls might scalp a piece with 10 points. So not that ideal, right? Inside bar is a high 1. So it's a high 1 in the bull's bull trend above bar 10. Should be buyers below 10 if we get there. So we're below bar 10. If 10 closes or 11 closes on its low, bulls will exit. Can't help myself sometimes. I bought a piece because I thought 7 was a good swing trade. So I bought a piece and I'm just going to trade it like I bought above 7. Had I bought above 7 and 11 was a bear bar closing near its low, then I would exit. So I will do that. If it closes like this, you probably give it one more bar. Still a lot of time in this bar, so let's see what it looks like. If we get a close above the bar 9 high, then you can pull your stop to below 9. I think it's still okay to be long betting on a bull trend day and just taking a chance that we test all the way up to the all-time high. Buy it says we're at an all-time high, but the current Emini contract is not, and the all-time high would be 50 points above. The problem with taking trades where, like I just did, where my premise of buying above 7 for possible low of the day, and had I done it, I'd still be long. The problem with that is when you lose them, you just feel like an idiot for taking the trade, even if the logic is reasonable. To stop below 9, okay. Yeah, I mean, probably. You again thought 6, 7, 8 possible bull spike. We might be entering the bull channel here. So I don't think it's a problem to have a stop there. I think it's definitely a reasonable scalp to buy below 10, but I don't really scalp. At least not like that. I think 7 was very possibly the swing of the day. So I would not be surprised if those traders who bought above 7 are going to make 20 points. We haven't touched the moving average yet today, which is an important factor, especially considering the fact we very easily could have at some point, and we just haven't yet. It's possible this is a bull trend day. So if you're buying, the market's probably going to try to trap you out a lot if it is a small pullback bull trend. Because small pullback bull trends, they look more like this than anything else, right? They don't look like they're going to form giant bull trend days. They usually look like they're going to be, kind of, constantly reversing, and they never do. So I'm just going to let this bar close. And then, remember how I mentioned early in the day how if we went down and formed a wedge bottom around the moving average, it could possibly lead to a bull trend if we kept this gap open. Well, we got a high 2 and kept the gap open, so it's possible that that's what we're forming. So bear doji bar on bar 11, not great. I need to write some stuff down. I'm going to pause the video. So what if 12 is a big bear bar closing somewhere down here on its low? Then I'll just exit. It shouldn't be that. If it's a small bear bar, it's still, regardless, it's a double top, 9 and 12 or 10 and 12. Neckline would be the 11 low. I think 10 and 12 with the neckline as the 11 low is more accurate because if you use 9 and 12, then your neckline is the 9 low. And I don't really know about that. So So again, this probably shouldn't be a bear bar closing near its low. If the bull, if this is going to be a bull trend, we shouldn't get that yet. I think we need a clear stop placement area before we it's reasonable to sit through large reversals or uncomfortable reversals. Usually, small pullback bull trend, the market will reverse against you a lot, but there'll be a clear spot for your stop that the risk isn't enormous, and you can just kind of sit through the reversal. So the clear spot for the stop is here or here. I mean, realistically, 7 low is fine. You're never letting that get hit. But the clear stop for the spot for the stop is down here, possibly here or here, maybe the 9 low, because we shouldn't even get here if it's a bull trend. But nothing is obvious with stop placement. And I think a lot of the time small pullback bull trends give you somewhat obvious spots to put a stop loss. So next minute and a half are going to be pretty important. I think the next like 3 bars are really important. The management is difficult right now. It's relatively. I mean, I'm going to probably pull my stop to below 9. I think at this point. But if we get up above the 10 high and close there, then the 11 low is it's a higher low. So there you go. I'm going to check Globex. So we're above the Globex high, and the Globex low is far below. So we're above the Globex high, Globex low is way down here. So it's unlikely that we're getting there. The next 30 seconds are pretty important here. Bar 12 is also a weird spot for a reversal, so it probably shouldn't get a reversal. Even if it closed on its low, it should probably be a minor reversal. All right, so I'm not selling. It's a double top bear flag for the Bears. Well, I don't know if you'd say it's a bear flag because there was never a bear trend, but the Bears, it's a possible reversal, I suppose. Bar 10, bar 12. Bulls, they have an open gap and they have an open body gap. Open gap with yesterday's high. You could argue this is a body gap. So if 13 is a big bear bar closing near its low, then you get out. If it's anything but that, probably just stay long. Probably buyers not too far below 12. But again, we never broke above the bar 10 high and closed above it. So I just, again, you gotta, if you're a little, if you get a little emotional, you have to try to put yourself in the other trader's shoes. Are you gonna buy? Are you gonna sell below 12 and expect to make any money? Probably not. So what is 13 doing? Well, it ran the skunk stop, which is the 11 low. This is why you can't ever stop below 11 if we didn't go and close above the 10 high. I think a stop below 9 because 6, 7, 8 possible bull trend, 9 start of the bull channel. I think that's okay. But if 13 closes on its low, then you just get out anyways. The hourly chart staying above you know, above the moving average. Maybe if this closes on a tie, then maybe you get second bull bar closing on a tie and you head towards the all-time high. Sorry, this is the ES. Um, so this is with extended hours on. I kind of like this chart. So bulls are betting this becomes a really climactic bull bar and gets somewhere up here. And initially today I was pretty open to the concept or the possibility of a bear bar, but I thought that if we were going to get it, it probably would have been bar one is the high of the day. So I'm not that sure we're going to get that anymore. 13's an outside up bar. That would be pretty ideal. Again, if you sold below 12, how do you feel about your trade right now? Probably not that great. Kind of have to sit back a little bit almost here because the reality is if we start to rally a little bit and we get above the 10 high, then you're going to look back at 11, 12, and 13 and think that was a really minor reversal. I'm not really sure what I was ever, you know, worried about. So as long as your premise remains valid, I would really like to see a bull close on 13 though. Probably not a bull trend day. So if 13 closes on its low, bulls will exit. I think bulls are going to exit either way here. This is big enough. Assuming it closes somewhere down here, bulls probably just get out. Yeah, I'd probably just get out below 13. Some bulls by the close of 13 put a stop below 13, taking a chance we never run the stop. Had a pretty good past couple weeks, but I don't know. I haven't had a week in a while like this where I just lose pretty much all of my opening couple of trades, which is pretty unfortunate. But this used to happen all the time. It doesn't happen very much anymore, but it's still you know disappointing. So bulls exit. I did buy again, but I don't think I'm going to win this trade. I'm probably just going to be done for the day. Um, the Yeah, I might just do other stuff. This is I'm probably done after this trade. 16 is a big bear bar closing near its low. Probably just get out. Sometimes the market just is not. I'm not really sure what I'm trying to say, but definitely not the greatest day for me so far. Partially probably just poor decision making. So I'm going for the new all-time high. Just basically taking a chance that we get a bull trend day. I believe it's right here. If we do get a bull trend day, oftentimes the most ridiculous measured move target you can think of is the one we go to. So it's actually right here. We have an open body gap here, right? If you look at a line chart, you'll see it. See, we have that. And we have the open gap, yesterday's high. So, maybe I'm using skunk stops, putting my stop below 9. Works sometimes, but obviously it's a lower probability than putting your stop, far below. But I don't know if I would say long below 13. Probably just exit and wait to see if you get another bull bar closing near its high, which you did on 14. 14 is a reasonable swing buy, so possible we get a measured move up. Somewhere up there. But nothing for me to do right now. I'm just going to pause the video and then this video is over basically, but I'm going to pause the video and update it with my management. But in all likelihood, I'm all done for the day after this trade. So I'm probably not going to manage this trade because we have the open gap here and the open gap here. So if we get to the moving average and stop me out, then that's fine. But we haven't touched the moving average yet today. Doesn't look like it's going to be a bull trend day, but it never does. It's a possible wedge. 1, 2, 3. There will be no trading video tomorrow because it's a Fed day tomorrow. So I don't trade on Fed days. I'm not sure if I'm going to make the end of day review this afternoon or if I'm just going to do it tomorrow. I might just do it tomorrow because it's easier. I have the whole day tomorrow, so I might just end up making it tomorrow. So I'm not sure if there'll be an end of day review today. I'd say probably not. And if it's not, then just expect it sometime tomorrow. But yeah, for this trade, my stop's below 14. I bought above 14, but my stop's below 14. And I'm just going to basically take a chance that we get a big bull trend day. I don't know, it's probably not going to happen, but if it does and we get to the all-time high, then risk offset will work. And if we get to the moving average too early, we shouldn't get to the moving average until probably bar 25 or bar 30 if it's going to be a bull trend day. So this is a possible wedge here, bar 17, 1, 9, 17. So like I said, I'm probably just done for the day. All right.